In October, we saw buyers making a comeback, driving a 44% increase in sales compared to last year. Now, this boost is largely due to increased purchasing power, and I'm going to break it down in today's video what's really happening in the market. My name is Alice Prince. I am a broker with Roller Page Signature. I am dedicated to keeping you guys informed on the GTA real estate market, whether you're planning to make a move now or in the future. I'll be sharing with you a few key graphs to illustrate the trends, so if you'd like these in your inbox, just fill out the form in the comments below. Now, starting off with prices, they're staying relatively flat year over year with only a 1.1% increase since last October. However, since August, prices have risen about $60,000 due to a recent 75 basis point drop in the Bank of Canada's overnight lending rate. Now, you're likely hearing this often. When rates come down, prices go up. So let's take a closer look at this graph, which actually looks at the relation between home values and interest rates. So when fixed rates dipped from 5.25% to 4.25% in the spring of 2023, values jumped by over $100,000 in just 90 days. So there's a clear pattern. When rates decrease, home values tend to increase, and we're on the early onset of that happening again as the Bank of Canada continues to cut rates. You can see it in this graph that it has played out in the last couple of months as the Bank of Canada has dropped their rates. And as rates ease, we're seeing consumer confidence shift, with buyers gaining about 20% more purchasing power, which has encouraged many buyers to re-enter the market. Right now, I'm noticing showings on properties, more offers are being made, and slightly quicker sales. Although homes are not exactly just flying off the shelves, it really depends on the area and housing types, and buyers are still finding themselves in competition. Actually, last night my clients made an offer on a home that was listed at $599 Clarington. It of course had an offer date, and they received 12 offers. So inventory remains high, which benefits buyers by providing options, and who does not like options? And right now there are over 24,500 homes on the market in the GTA, and this might sound like a lot compared to 2021 when we just had 8,000 homes available for sale, which was completely mind-boggling. Yet ironically, we're nearly back to 2021 pricing levels. Now, currently nearly 1/3 of all listings in the GTAs are condos, and I think that is sometimes missed in the media. The condo market has traditionally attracted more investors, some of whom are now having to adjust their cash flow for various reasons. One large reason for the condo surge is that many pre-construction buyers who actually had their units completed this year, who maybe expected higher rates, are now unable to cover that additional maybe $1,000, $1,500 of carrying costs that they have to put into the property, prompting them to sell and adding to that condo resale inventory that we've already seen. So when it comes to condos and pricing, there's no rush to say that prices are going to go up anytime soon, really, because the inventory levels are still high, about 5.5 months, signaling a buyer's market where you can find a great unit at an amazing discount. Something that I do want to highlight here is that this trend of so many homes being on the market isn't about people being unable to afford their primary residence, because in the suburbs, sellers are typically selling to reinvest into another property rather than cashing out of the market entirely. So we're observing two different dynamics here. Just to put things into perspective, here's a breakdown of all the active listings by region within the Toronto Real Estate Board. Alton is at 2,398, Peel is at 4,277, Toronto has 9,756 homes for sale, York Region 4,690, Durham Region just over 2,000, Dufferin County 128 homes for sale, and Simcoe County has just over 1,000 homes listed for sale. So since I primarily work in York Region, Durham Region, and Toronto, let's take a closer look and a deeper dive at sales, average price, and months of inventory in each area, and kind of measure what's happening there since August. Even though prices haven't surged yet, the first indicator of the market change is usually sales, with prices typically to follow as inventory is starting to get more absorbed. A great metric to watch if you're watching the market is something called months of inventory, which is the ratio between sellers to buyers in the current market. So because we've seen an incline in prices since August, I'm really just going to look at and compare then till now in the three different regions. So starting off with Toronto, sales and prices have increased, but the important thing to note here is the months of inventory. And if you're kind of like, Alice, what the heck is months of inventory? It's basically a fancy term that we use to measure the absorption rate. So if no new homes were to be listed at the end of October, it would take all the active buyers in Toronto just under 4 months to purchase a home, compared to the 5 months that we've seen in August. Another way to look at this is that right now, 1 out of 4 homes that are on the market are selling. Now, York Region has followed a similar trend, and the average price is sitting at $1.31 million, up from $1.29 million. Although more inventory came onto the market, more sales also happened, and it dropped inventory levels from 4.7 to 4 months of inventory. So homes are being absorbed quicker. Now, last but certainly not least, Durham region. So similar story here. The average price is starting to slowly rise, not by much, but the bigger story here is that months of inventory went from 3 months to 2.5 months. Something to put into perspective is that anything under 3 months of inventory is considered to be in a seller's market. And I would certainly say that homes under $1 million, especially in Durham region, and really anywhere, but you can't really find those much anywhere anymore, are being sold in multiple offers still, and you will likely find yourself in competition and having to make really competitive offers if you're out that way. Now, before I kind of wrap up this video here, I just want to say that this video isn't meant to make you feel like you need to go out there and be pressured to buy something right away. But if you're considering buying something in the next 6 to 9 months, now would be a great time to connect with a realtor, with a mortgage broker. That way you can get familiar with what is happening in the market, and even maybe go check out some properties or open houses to really get a feel of current values and options. Because as buyers' interest does continue to grow, the reality is that we can expect inventory to be absorbed gradually, with prices likely to start moving in response, and I would hate for you guys to miss a great opportunity. So there you have it. Thanks for watching, and if you found this helpful, don't forget to like, subscribe, and drop a comment if you have any questions. Ciao for now, and we'll see you on the next one.